Morning, Shayne, and welcome again to Blue Notes. Thanks very much for joining us. Just released the December quarter trading update. It was a solid result. There was some good performances from across the business. What struck you as some of the highlights there?
Well, again, what's really showing in our business is the strength of our retail franchise, both here in Australia and New Zealand, and also the small business franchise. Those are terrific businesses and they just continue to go from strength to strength. Really pleased with that. The second thing that I was pleased with was the ongoing restructuring we're seeing in our institutional business, which is really about capital efficiency and making sure we're allocating our resources where we get the best returns, both from a customer perspective, but also from a shareholder perspective.
Because you have made the comments that it's not so much on geographies where you're looking to get an earnings proportion. What you're looking for is value creation. So you're starting to see some results from that work now.
Absolutely, and we talked about that at the end of last financial year when we started to see some of our trade assets coming off. And again, that was really about disciplined allocation of our capital, and that is absolutely starting to have an impact. In fact, we talked about in our release that our margins, our net interest margin in our institutional business actually rose. And that's the first time we've seen that in a number of years, and that's really as a result of the actions we're taking.
So that underlying driver, and it's a better result compared with the previous corresponding period and the average of the previous 2 quarters. Is that something that you're confident can keep on going?
I think so. I mean, I think the underlying businesses that we have, as I said, will continue to do well. Retail and commercial here, our trade and capital flow intermediation businesses. There's undoubtedly going to be some challenges that are a result of the slowing global economy and in particular the slowing Asian economy. And
presumably, given that climate is one where revenue growth is very hard to come by, there's a focus on costs. Are you happy with how costs are being managed?
Yeah, we're taking a view that the environment that we're working in continues to be volatile and a little uncertain, and that the best thing that we can do to be prepared for that and to mitigate some of that is be really, really tightly managed in terms of our resourcing. And so there's a big item here in terms of cost management, and we saw first quarter absolutely some great outcomes in terms of that, and that'll continue to be a focus. But equally, it's also about capital efficiency and making sure every dollar of our capital is wisely allocated.
To an extent, that's the December quarter. If you look at global markets, not just in Australia, but the anxiety has been since the start of the new year. And indeed, in this update, you flag some credit quality issues, particularly in Southeast Asia. Has the world changed enormously then since the start of the year?
Look, I don't think it's any surprise that the Asian region in particular has been slowing for a period. We've been talking about that, as have others. I think what we saw though at the beginning of this calendar year is that it's been a little bit more volatile than we were certainly expecting, and some of those conditions have been a bit more difficult. And so where does that hit? It tends to hit in the manufacturing base across Asia Pacific, which today is in Southeast Asia, most predominantly Indonesia, and that absolutely is having an impact in terms of our credit books. And we've started to see that in the recent weeks, and we flagged that in our result update.
So when you look across those credit quality issues, are you seeing any particular themes, trends, or is it across the book there?
It is at the present, as I said, it's around Southeast Asia. It's broadly based. It's not one customer group in particular or anything like that, but it does tend to be concentrated around manufacturing, kind of industrial companies and those exposed to trade.
Leaving aside the asset quality, the other thing that investors obviously have a strong interest in are your funding costs and the outlook for dividends. Can you expand on that at all?
Well, we've certainly seen, and as I said, it's been pretty widely reported that funding costs for banks and actually corporates that borrow in the capital markets have risen, and risen in a fairly material way. And that you've seen some of that has already meant that there's been a repricing in certain parts of the economy. So that's absolutely real, and we'll have to see where that plays out. In terms of dividend, really, banks have a number of levers at their control, and obviously we need to maintain our revenue momentum, and that really generates lots of organic capital. We have ability to manage our costs really tightly, and of course be really efficient with the allocation of capital. So in an environment which is a little bit slower, in an environment where we start to see that credit cycle turn, we have to be really vigilant around that capital and around our credit management, but also be really tightly managed on costs, and that's exactly what we're doing.
You've also flagged a couple of key appointments to look forward to: the Chief Financial Officer, your old role, and a Head of Digital, which people are particularly interested in. How far away are those?
Well, we're really excited to be able to have this new role of a new digital banking head. I believe we'll be able to announce that in the coming weeks. And obviously the search for a CFO continues. And we've got some terrific internal candidates, which is great to see. But obviously we're also benchmarking that externally. That's also likely to be announced in the coming weeks. So I'm really excited about both importance. They're really important to the team. But the team that's already here is totally focused on execution, and that's what we're going to be continuing to do for the balance of this year.
Well, look, thanks very much again, Shayne, for talking with Blue Notes.
Thank you.